All right, guys, we're going to do a quick trade recap here from this morning. Let's just start from the very beginning as far as getting our levels. So like I was saying in my previous video, the first thing I do is I get my volume profile levels. All right, so what we need to do here is we need to go on our this chart right here is showing me the New York session, the volume profile for each New York session. So we're going to go on yesterday's session here, and that's how we're going to mark our levels out. All right, so this is the session from Wednesday, March 26th. Okay, so our value high 5801.75. So I already have all these marked out. So as you see up here, 580175. Our point of control is at 5759.25. Value low 5743. All right, so we have our levels here. And at this point, as far as this chart goes, I'm just watching the current session profile develop. I don't use it as much because most of my trades are pretty quick in the morning as soon as the market opens, and there's not really any data here that's formed enough for me to really use it. This is really good for if you wait a few hours after the market opens and you have these levels developed, or even like the PM session. This is a really good tool to use. But yeah, so I'm not really looking at this too much after I mark my levels out. My main focus is this chart over here. So my footprint chart where I'm getting my order flow at. All right. So now that the levels are marked out, I go on the higher time frame here and I just look at what we're doing at a macro perspective. So as I was saying yesterday, we rejected this daily supply area. As you see, the body of this up close candle, that's our area of supply. Traded right into it on Tuesday, and then sold off of it on Wednesday. All right, so yesterday, that was the sell off. What I was looking at this morning, we yesterday afternoon traded into our weekly opening gap, and as you guys know, we almost always fill these. There are some times where we have a new week opening gap to the upside, and we won't always fill those because the market, I mean, it's trending up, overall, right? Usually. So we don't always fill them when we gap up. But in this case, us starting that sell off yesterday, this is a pretty obvious area, price magnet that I feel like price is reaching for. So this morning, I was bearish going into the market opening until this gap was filled. I wanted to see this gap get filled, and that's exactly what happened, right? So my bias going into this morning is bearish, right? So now what I do is I go back on the 5-minute, I look at my levels, and if we rewind this to market open, 9:30, all right? So this is pretty much what I'm looking at. After I get my bias, I'm looking at this right here. We have our value low. So if I'm bearish, what do I need to see happen at these levels for shorts to make sense? Well, we're at our value low, right? So I want to see a slingshot through our value low, and I want to target this new week opening gap low. That is my plan going into the market opening. I posted that in my Telegram, and that's exactly what I was wanting to see. So that idea, right? Again, it doesn't matter what you think, what you expect, because the market doesn't care about you at all. It doesn't care about you, your opinions, your thoughts. It does not care. It's going to do what it's going to do. So that was my idea. That was my prediction. And if I got it, I was going to be super confident in that setup, and I was going to take it, which is what happened. If we were to bounce this value low and slingshot off of it, that would have been a different story. I probably would have taken that too and targeted this point of control right here. So if we look at what happened here, let's exit this, and we'll see market open. We sold off the value low. This is a slingshot, and we went straight to the tick to that new week opening gap low. And that's what we ended up having to move off of. We bounced that level, and I'll show you all another trade you could have taken to that a few of my guys took. All right, so if we go to the order flow here, we'll see the slingshot through the value low, and you'll see exactly what I'm looking for when I'm taking these trades. All right, so 9:30, this is market open, negative 1,663 delta. So that is a slingshot, right, through the value low. We have bearish follow through as far as the volume goes. So at this point, I ended up getting in my position during this candle. Normally I wait, but I had a super high conviction, super confident in what we were about to see. It was like 2 or 3 minutes into the market open during this 5-minute candle. Went ahead and got in my position there, and I had my limit order set right at this new week opening gap low. I wasn't going to play around because I know how these levels work, and price was going down because it was pulling to this level. So there's really no reason for us to just blow right through it. Could we? Yeah, but you gotta be super careful with targeting these liquidity voids, these opening gaps. They are very strong. Okay, so got in that trade, got about 15 points out of it. It was a really, really good trade, good setup, exactly what I was looking for. And those are the trades that you wait for, right? The ones where it's just screaming at you to get into it, and you feel super, super good about it. You're able to go into the market opening with a plan that makes really good sense. And when that happens, those are the trades that you capitalize on. Okay, so that's all I took this morning. Now we had another play right here. So this is a value low slingshot to the upside. I'll show you guys just for a teaching example here. So this was at 950. So we go on the order flow here. We'll see the 950 candle was right here. So this is an example of a bullish slingshot. So we have a 1,701 positive delta. So remember, anything over 1,000 is what I'm looking for. Nothing specific there, but just typically what I've seen to work is anything over 1,000. That's what you want to be looking for. Anything under that, it's just not what I want to see personally. All right, so a 1,701 positive delta through this value area low. So as soon as we get that, you get into this trade, target the next level, point of control. All right, beautiful, beautiful trade there. That would have been, from value low to point of control, it's about 17 points. So you would have gotten 10 to 17 points out of that trade easy. And yeah, so 2 beautiful examples there. So far this week, I've taken 4 trades. We had 3 opportunities at these levels, like 3 really good opportunities. And on average, that's usually what we're getting each week. We're getting anywhere from 2 to 3, some days or some weeks more than that. But what gets people is they want to take trades every day, and you can do that. But the more you're in the market, the more risk you're exposing yourself to. So if you're taking 3 good trades a week, that's incredible. Like, you should be proud of yourself. That's all you need to start making really good money. It's only a matter of scaling at that point. So, like going into tomorrow, I've already taken 4 good trades this week. I've had a great week. And, a lot of you guys may have had a good week too, right? So going into a Friday, people end up screwing themselves over because they force something they shouldn't be trading. And all those profits that you make throughout that week are gone, or a good bit of them are. And if you would have just not traded and taken your 3 great opportunities that you got for this week, you're in business, right? So don't overtrade, guys. Just wait for these levels and you're going to become profitable. You're going to start making money. I'm not the only one doing this. I'm not the only one making money off this strategy. It's really, really good. It's incredible. And yeah, guys. So that's really it. Slingshot through value low, new week opening gap target. And then you had a slingshot through value low to the upside, point of control. That's your target there. Something else too I want to show you guys, especially you ICT traders. This is where you can use order flow with his concepts and be a way better trader, way more profitable. All right. So what we have here, we have from 945 to 955, this 3 candle formation here. Let's go on our chart and let's see what that was. So 945, 955, we have a beautiful fair value gap here. All right. Fair value gap. And this is where you can kind of combine this stuff together. Fair value gap there, value low is right in the middle. We slingshot through value low. That's my system. That's all I need to get into this trade. But if you want to wait, we have a fair value gap right here. All right. So we all know fair value gaps don't always work. They work sometimes, and then there's times where they just don't work and we blow right through them. So what is a real fair value gap? What a real fair value gap is, it's an inefficiency, right, in volume. So when we had this displacement like this big energetic push, this is happening super quick, right? So we can assume there's an inefficiency in this candle, which is why price draws back into this area and we sometimes trade off of it. and sometimes we just run right through it, right? There's not always an inefficiency in these fair value gaps. With the way ICT teaches, you're just using price action to assume there's an inefficiency in here, but you don't actually know, right? You have no idea unless you're actually looking at the order flow. So let me show you a real fair value gap here, okay? So this candle right here, this 10-10 candle, this is the candle that traded into this fair value gap, and we ended up having a nice move off of it, right? So let's go back to our order flow here, and we're gonna see this is a fair value gap. So you see all this volume in this candle, all this volume here, all this volume down here, like in the thousands, right? So from, let's just say like right here to, we'll say right here. This area right here in this 5-minute candle, you see super low volume, 65, 81, 127, 70, 80, 78, 102, 146, right? Super low volume area here, okay? So this is an actual inefficiency. So let's go over to the 10-10 candle, and you'll see what happened here. Price went straight into this imbalance, and we traded off of it, right? So you can actually look into these 5-minute candles or whatever time frame you want to use, and you can actually precisely pick out where these actual inefficiencies are, and from there you can use that, right, as a confluence, as a strategy, whatever you want to do with it. But this is an actual fair value gap, okay? So just thought I'd point that out to you guys. There's so many ways you can use the order flow. It's honestly insane. But for me, this value area system, this tells you all you need to know. There's no point overcomplicating things. If you just do what I've been telling y'all to do, you're going to be fine. And like this morning, I took this one trade. I don't care about the rest of this. Like, yeah, you could have taken this trade too and whatever else, but I'm looking for one trade a day, right? 10, 20 points. That's kind of what I'm looking for. And then if we're not in these levels, I don't trade, right? So, but yeah, guys, that's it for this video. Hope it helped you guys out, and I'll catch you guys next time.